There is blood in the streets this last 2 weeks, 3 weeks. I tell you what, I think this account has run down from, a month ago we were at 51. Now we're at 42. But you know what? During that time, we have been collecting credits and rolling positions and making more money. My name's Isaiah. In this video, I'm going to recap what we've done this week, as well as talk about plans upcoming. I do want to show you my trade history before I jump over to my Excel files. Like I said, full transparency. Like to keep everything up front, what we do, open, not hide anything. We did $700 this week, a little bit below what we've done the last couple weeks, but I was a little hesitant to make trades this week because the market just really ran down. And if you're new to the market or you just started trading last year when it only goes up, don't be afraid. It happens. I promise it happens. It goes down, it comes up, it goes down. It happens. All we can do during that time is sell options, roll your positions, and collect continuous credits throughout. Don't try to time the market. Don't try to guess which way it's going to go. Sell an option, walk away, and regardless of how low the stock may run, roll your position farther out. Give yourself more time. And in rolling positions, you're going to collect more money. So I like to show this one here. Serve $94 credit from rolling that position. Remember, I rolled that position, and that doesn't include, I collected $94 for rolling that position. That doesn't include, I think, the $70 or $80 I got from opening that position. So that 94 is an addition to that. So let's say it was 80 bucks. It's $174 collected from a $700 investment. That's a pretty good return in just 2 months. And you know what? If it doesn't get up to that price by expiration, I'm going to roll it again. So, like I said, full transparency. As you can see, all my credits, options, we collected about $700 total this week. That's $140 in dividends and $560 in options. So let's show the dividends real quick. Right here we have ULTY. Really disappointed in that payout. YMAG, okay payout. YMAX, actually pretty good payout. And RDTDE, it's normal. Honestly, the biggest hurters of my account are these funds. I always say it, and I say it every video, you will make so much more money with less risk selling options than you will putting into the high-yielding dividend funds. But I put these in here just to show examples on how options can outpace them. So let's actually look at those real quick, see how much they're down. And again, you're collecting dividends, and I don't care how high the yields are, you're not going to get your money back. I just do not believe it. So yield max down to $11.91. This position is down $2,700. According to my dividend tracker, I've collected a total of $1,000 in dividends from them. So I'm still down $1,700. Not great. YMAG, we're down $515. I'll have to check and see how far we are down. I only checked YMAX because that was the one I put the most money in. Let's see, what's another one? MRNY, we're down about $1,000 there. That's a high yielder. RDTE, we are down $151, but I only have like 500 in it, so that's pretty bad. Okay, so we're looking at our Excel file here. As you can see, $700.33 collected this week. I really only opened about 3 total positions, as you can see there. If you look in column C, it says rolled CSP. That means I rolled my cash secured put. Again, I try to reiterate each video as well. For those that are new, when you sell a cash secured put, in layman's terms, all you're doing is agreeing to buy a stock for a predetermined price. And because you do that, you collect a credit. So when you roll that position, you are collecting another credit and rolling it out a couple of weeks to a month. So that rolled credit is in addition to the credit you collected when you opened the position. Then we see CC, that's covered calls. It means I agreed to sell 100 shares of a stock. And I rolled a couple CCs as well because I didn't want to get them called away. which it's actually surprised as far as the market ran down that I had some that were in danger of getting called away, so I rolled them. And then you see the dividends at the bottom there. But like I said, $700 on the week. Not a bad week at all. Our goal is always 550, so we beat that, which is always great. And then on this next file here, this is our running total. So 11 weeks in a row now. You see our date ranges from 120 to 44. That's as far back as I wanted to go. It just takes forever to tally up the credits. So I just started tracking 11 weeks ago, Excel file every week for it. So as you can see up at the top there, row 2, $700.33. That's 11 weeks. And in 11 weeks, we have collected $9,164 in selling options. And that breaks down to $833.12 per week. You divide that 91.64 divided by 11, because that's how many weeks you've done. That gets you your average weekly payout. And then below that is $43,322. That's taking that weekly pay times 52. So that's what we are on pace to earn this year. Not bad. We're on pace. Like I said, we are, just over 10 weeks. We're at 11 weeks. We got that $9,100 collected so far in selling options. Now I want you to go over to column F. That's how many the money we've collected in dividends so far. So that's 11 weeks worth of payouts, $2,015 we've collected in dividends in that time frame. As you can see, the disparity, column B versus column F, the amount of money we've collected selling options compared to dividend payouts. At column G, that breaks down our weekly dividend pay. We're averaging around $183 a week in dividends. What ups those averages is the week that MSTY and MRNY pay, because those are both monthly. So the 2 weeks out of the month that those pay, it's an extra one on top of the 4 weekly pairs that I have. So it helps update that a little bit. But if you take that $2,000 or that $183 times 52, you get right around $11,000. So if we would average that and add that into our option payout, that 43, we'd be looking at around $54,000 for the year earned if we stayed on pace with this selling options as well as our dividend payout. So, hey, 50K a year in the market, that's not bad. Extra cash is always great. We're going to jump back to the account here, so bear with me. Yep, I tell you what, like I said, big rundowns in the market, but that's okay. As you can see, we've collected over 11K between options and dividend payouts this year. So we're on a good pace. We'll see if we can actually break that 50K threshold in 1 year in options. That would be fantastic. The market had a big rundown. That's okay. Roll position. So next week we have, 1, 3, 4, 5, 7, 10, 12, 14, 16. So we have 16 option contracts expiring next week. I know I'm going to sell another covered call on FCEL. They expired worthless this week, which is fantastic. That means my shares did not get called away, my 700 shares. I am going to sell a covered call on them again this week, and hopefully I can collect another $50-$60 on it. It's nice when you own the shares and you just get to collect that $50 a week from it. It's essentially a dividend payout. So if you can view it in the dividend terms, you're collecting $200 a month for like $3,000 worth of investments, which is, just under a 10% yield for a month. So that's pretty good in my opinion. But so that's the goal for the upcoming week. Be patient. Don't overtrade. Let's always go for our minimum of 550. Outside of that, don't overdo it. Don't overdo it. That's where you put yourself at risk. I was happy to see SoFi roll down a little bit farther this month. I always love that. That's one of my favorite investments. I sold a $9 put. Of course, it dropped into the 9s today. I probably could have sold another one, but I did not. I just got a text that said Jim in the morning. That's a good reminder. Always got to hit it. We're making gains in the market, making gains in the weight room. But yeah, so the account's doing well. Like I said, you see the down, but that's just, it's really misleading because like I said, I'm selling options. All I'm doing is I'm agreeing to buy a stock for a predetermined price. If it drops below that price, I'll get assigned and sell covered calls. If I don't want to get assigned, I'll roll it out farther. You do get assigned early in down markets. It happens. That's okay. Sell covered calls till it gets called away. You'll make your money back, and you're able to diversify your funds outside of putting it all into one account, one dividend payer, things like that. If I would have never put that money into the Yield Max funds, I would have generated a lot more capital from them. But again, I just like to do that to show the example. And I'll be honest, if Yield Max drops down to $10, I mean, I'm going to sell. I'm going to cut that loss there. I wanted to show the example, which I'm glad I did, but at some point I got to cut those. And I always preach it that I do not like those high-yielding funds. They erode over time, and they do not do well in bear markets. And I don't believe we're going into a bear market. I do not. I believe we're having some uncertainties, so we're pulling down. And for those that say, oh, we're in a huge bull market, zoom out on your chart. On all your stocks, zoom out. More than likely, the price is still higher than it was a few years ago. So we're not in a bull market. I do not, or a bear market, I don't believe. Now, we'll see what happens in the next couple of weeks. But like I said, be patient. Collect your options. Roll your positions. Buy yourself more time, and you'll be okay. And we will continue to grow together, but a little bit longer video today. So if you don't like my ramble, let me know in the comments. Tell me to shut up. But if you did like this video, I would really appreciate if you could leave a like, a comment, subscribe. And if you're somebody that wants to talk options and get all the trades I make when I make them, as I show you in my trade history, you see the credits we're collecting. I don't hide anything. Full transparency. I don't change up my strategy. It's the same one regardless of what type of market we're in. But I'll put my Fiverr link in the comments below, and I will see you in the next one.